Good morning, Las Vegas, and thank you all for joining us in this early session. My name is Mason Foard, and I'm the Director of Bitcoin Strategy at Melius. I'm also a part of the True North podcast slash platform. Today, I'm going to be hosting this panel on sentiment, institutional sentiment, and we have three amazing panelists with me here today. We have Dylan LeClair, the Director of Bitcoin Strategy at Metaplanet in Japan, the third largest holder of Bitcoin in the world currently. We have Gui Gomes, founder and CEO of OranjeBTC, the largest Bitcoin treasury in all of Latin America and Brazil. And we have Nick Payton, a VP of marketing at BitGo. BitGo obviously known for institutional custody and infrastructure. And they recently IPO'd, which is really exciting to see. So let's hop into it. Obviously, right now we are in a bear market, and we're, price-wise in a very different regime from 1 year ago. Dylan, let's start off with you. How would you say the sentiment on the institutional or corporate side has changed from, let's say, 1 year ago today?
Yeah, I think Bitcoin's been very much legitimized in the last 2 years. I think it's good that the Trump narrative has kind of faded by the wayside, as that was the driving force and narrative for Bitcoin specifically in 2025. I think Bitcoin responding to the Iran war, in general, when markets can't go up higher on good news or when they don't go down lower on bad news, I think that's kind of when you look for inflection points. And so, just last week or 2 weeks ago, there was back-to-back headlines a half hour apart. Morgan Stanley launches an ETF, and then Iran's military toll booth is accepting Bitcoin. And so I think that kind of covers like the broad. This is a broad movement. This is not just suits on stage talking about fixed income. This is not just currency in the developing world. This is happening kind of across the ecosystem in many different ways. And so from the institutional standpoint, I think it's pretty good. We're all up here as like diehard Bitcoiners with 100% of our balance sheet in Bitcoin or close to it. But most institutions dip their toe in and take 4 to 6 quarters to really get comfortable with an allocation and add. So I think the sentiment's pretty good. It's not. It would obviously be better if Bitcoin was raging to new highs, but yeah, I think we've hit an inflection point, and I would wager the bottom's in.
Amazing. Guy?
I think, first of all, good morning, everyone. Pleasure to be here. And I would echo what Dylan just said. I think it is much slower, right? Institutions, they move at a much slower pace, but they don't change their minds as fast as retail, right? And we've seen Bitcoin going all the way from 126 down to 60K. And many people within the Bitcoin community, folks who have been around for many, many years, were even questioning. I think it was the first time we saw Bitcoin going to like an important drawdown while gold was at all-time highs and stocks were at all-time highs. And many Bitcoiners were questioning what's going on, right? And I think the sentiment on the retail spectrum is much more volatile than when we're talking about institutions. And we continue to see many positive and bullish news. So we mentioned about Morgan Stanley ETF. We had Citibank announcing that they will be custodying Bitcoin as one of their services. Bank of New York Mellon, the largest custodian, is already doing so and will increase their services. We've seen Charles Schwab announcing that we'll be offering spot Bitcoin trading, and they're now educating the masses. So when you talk about institutions, it's a much lower pace, but way less volatile. So if anything, I think the price action gave them even more appetite, because I just talk about Morgan Stanley. What a timing for their launch, right? They launched in the ETF, and Bitcoin moved maybe 5-8% in a single week. So it's a great opportunity to call your clients and pitch a new product. So I think the drawdown is not impacting institutions as much, and the sentiment is much more volatile on the retail spectrum.
Yeah, you guys kind of said it. I'd love to echo that, though. Obviously, BitGo focuses on institutions, and so we can tell you that the pipeline of institutional banks, nation states coming in, looking to do unique strategies, whether that's bonds like Stretch or derivative markets, et cetera, they're coming in with both hands. They're just slow. I was talking to someone who heads up a crypto desk at a very large bank. I'll leave them anonymous for now, but they were talking about Stretch, for example, and what's going to take for them to start coming in size for bonds or Bitcoin or recommending it to their clients. And a lot of times they just kind of want to see, first of all, they want the regulatory thing to work itself out, genius clarity, of course. But they're starting to get really interested at these price points, like Guy said. But they continue to leg in tiers or tranches, and they're nowhere close to the size they want to be at. So really, really excited. And then retail, we said for years that retail was front-running the banks, and I think we were pretty right in that sense. But now that the banks and institutions are coming in, you're starting to see volatility depress a little bit, which is a good thing. The market's maturing. And so I'm really excited for the next 2 to 3 years and what's going to bring for the market in general. So
Amazing. I don't know about you guys, but I'm on Twitter too much. I know Dylan is, and there's a lot of fear and a lot of uncertainty and doubt going on. When you're looking at maybe what's going on online or what's going on with retail versus on the institutional side, do you think that there's a fundamental misalignment? And if so, what are the real fundamentals in the Bitcoin market right now that back up a bullish price perspective or a bearish price perspective?
Yeah, I guess I'll start. I think it's just flows is the simplest metric to look at, and you can there's a lot of on-chain data. You can just look at Stretch, right? So if you're an analyst in the Bitcoin space and you're not watching Stretch right now, I think you're missing a lot. I like to look at just kind of like an on-chain cost basis of the hot money, like fast money, versus average on-chain cost basis of every Bitcoiner, and so we kind of almost nicked it. It was like $55,000, $56,000 per coin. The short-term kind of hot money cost basis is like $80,000 a coin. And so, I think that's a logical place for Bitcoin to kind of retest, chop around a bit. If it's a bull market, we'll confirm and we'll trend above that. In terms of what I'm watching as well, like I think right now you're seeing in perpetual futures, traders are bearish and are fading the move, right? So funding's negative. Right, so you can buy one Bitcoin, or you can get paid right now to long, Bitcoin futures. And I'm not pitching people to buy Bitcoin futures. I'm just saying that, when Bitcoin's in a bull market, people are demanding, to get long at 30, 40, or 20, 30, 40%. Right now, it's slightly negative, right? So I think that's kind of showing. It looks pretty similar to me to the end of the 2022 bear market, aside from the fact that, like you pointed out, it was sort of Bitcoin unique. Before the Iran wars, stocks at all-time highs, gold's at all-time highs, Bitcoin's down 50%. What's going on? And so, I also think it's a little bit unfair to say, well, okay, the Iran war started, Bitcoin's outperforming against the S&P. Well, it's like, yeah, we already drew down 50%. But yeah, it seems to me that the wreckage and most of the sellers and the forced, puking by retail or leveraged, degens has kind of come and went. And now it's if you made it through that without wavering, you're rock solid. So yeah, I kind of forgot the question a little bit, but I'll turn it to Guy.
Okay, I guess we're still talking about this early in the morning, first panel, folks. Give us a break here a little bit. So we're talking about the next 12 months and what could change a little bit in terms of Bitcoin and in terms of sentiment. And look, this might sound silly, but it's another 12 months, right? And for a new asset class that is around 17 years old, it really matters. It matters because the ETF from BlackRock will be 1 further year long, which means that most managers out there who are financial advisors helping their underlying clients will have more confidence, right? The Morgan Stanley product will be 1 year old. And when you're talking about very new products, Stretch, we just mentioned, will be kind of almost 2 years from 12 months from now. So every single month matters, right? Bitcoin is still a very early stage innovation that many people don't understand. All of these new products, the ETFs, Bitcoin-backed loans, Stretch, Bitcoin Treasury companies, they're still quite new. So I think what happens with 12 months is more people get comfortable, Bitcoin will be moving along, block after block. These new products will have more track record, which makes it easier for folks to allocate. These banks and institutions that have been moving since the Trump administration with new regulation coming out will be more comfortable. So I think it really matters. I think there's a lot of triggers that, like 12 months for Bitcoin is a lot of time for anyone in this stage that has been working on this industry. 1 year, in my view, counts for about 7. So it really matters. And I think there's a lot of new products, a new Stretch coming along, new solutions around it that could really move the sentiment and get more flows coming into the asset class.
Yeah, building the bear. We've been saying that for 4 or 5 years now, and it couldn't be more true. I'd say what I'm really excited about, like Guy said earlier, which was Schwab just now starting to introduce this to their clients and arming their sales team to go out and sell this. That's what's going to help drive retail sentiment, in my opinion, and price action. Obviously, more and more bonds coming online. We talk about Stretch, but I think more are going to come behind that, obviously. And one of the bigger things that I think, or I'm excited about is, certain countries, obviously we have macroeconomic situations, war going on. Certain countries don't want to use USD. Certain countries don't want to use yuan, and so on and so on. And so, and then you look at all these hacks going on some of these centralized exchanges, or et cetera. So what does that mean? If no one can trust anyone else, what options do we have to be the global settlement network around the world? In my opinion, it's Bitcoin. That's obviously good at the nation state level, institutional level, but then of course retail is involved there. So like Guy said, these next 12 months are going to be really big, particularly the next 24, I would say. And so the next bull couldn't come soon enough, but I feel like we've bottomed. I feel confident in saying that as well, to echo Dylan's sentiment. And so lots going on in the next few months here.
If I could just, add one thing, I think the geopolitical point is very, is very, very important. The war started in the Middle East, and this has been a theme for decades. But look what happened. All the waterways are closed. The airports are closed. If you have 10 tons of gold in a vault somewhere in the UAE, and you're trying to get out, what do you do, right? And so at the same time, Bitcoin's this permissionless layer. Simultaneously, you're seeing, USDT, Tether, stablecoins are getting frozen in the conflict, right? So this is like, and at the same time, the Trump administration is championing Bitcoin. The sworn enemies of the Trump administration, the IRGC, are also using Bitcoin, right? So there was this kind of trope for a while, Bitcoin's for enemies, and it's true. Another thing I would like to, kind of circle back to is, we're talking about products and, Morgan Stanley's ETF and Treasury companies and Stretch. And, if you're a Bitcoiner from 6 years ago and you just, time traveled into the present day, you're like, what are they all talking about? Why does this matter? And, something that I didn't understand 6 years ago is Bitcoin winning doesn't look like, it goes to infinite dollars and currencies collapse and Bitcoin wins. Bitcoin wins means you have to meet the world and the money in the world where they are. And so the reality is 99% of the money in the world can't buy Bitcoin. They can't buy Bitcoin ETFs. They can't buy spot. They can't self-custody. There's $10 trillion of private credit that can only buy private credit. There's $100 billion of convertible bonds that can only buy convertible bonds, or they can only buy common equity. And so if you're a Bitcoin bull and you think that this is the future we're going to, ultimately it's going to look like Bitcoin packaged and sliced into a bunch of different formats and styles to meet people where they are. Because when you talk to an institutional allocator, they manage $1 billion portfolio. They're a Bitcoin bull. They're like, Dylan, we like your company because I'm a Bitcoin bull, but I can't buy Bitcoin. My day job, I manage companies in the Japanese stock market, right? And so I think there's a lot of capital in the world, and Bitcoiners, the ecosystem, we're meeting them, we're meeting them where they are.
And that's actually another point where there's so much capital in the world. I don't think anyone here would bet against more liquidity coming into the market in the next 12 to 24 months and beyond. I don't think they have a choice. And so you add that to the building in the bear, the additional products and services and settlement layers coming online. It's very, very exciting here coming up shortly.
Dylan, Metaplanet's obviously in Japan, and Gui, OranjeBTC is in Brazil. So you guys have a global perspective. Can you talk a little bit about what's happening in your own region and maybe how that might be differing from the U.S.?
Yeah, sure, and I'll keep it concise, or try to. But Japan's at an interesting inflection point where the government is recognizing this is important. The stablecoin regulation is improving. Bitcoin's going to become a regulated financial asset. Right now, it's in this gray area. At the same time, there is a little bit of friction or pushback from the legacy incumbents. I think Metaplanet, frankly, we grew so fast, and it was a little bit unsettling. And so we're positively engaged with the regulators and everybody that matters on the ground, and explaining why Bitcoin's important for the future of Japan and important for the future of capital in the world, and pointing to the U.S. for that. So things are going really, really well, and I think a year or two down the line, we're going to see a lot more. It's like we're kind of in the 2023 moment for regulatory, stuff in Japan, right? So in the U.S., 2024, you had, the accounting change, ETFs, kind of a flurry of positive events, and so I think we're kind of setting the stage for the equivalent of that in Japan.
Yeah, amazing. A lot Brazil as well. Brazil is in an interest point as well. So on one way, we have a weak currency, right? We have the BRL, which is not a hard money at all. So Brazilians have dealt with inflation and currency devaluation for many, many, many years. And on one end, Bitcoin is a little bit easier to grasp. And we've seen meaningful adoption on the retail spectrum of the country, and not only on Bitcoin, but also stable coins. There's a lot of research papers being published showing that Brazil is among the highest adoption countries around the world. On the other end, when you go to the institutional aspect, we are years behind. We have regulation, but it's not even regulation itself the main problem. The regulation is still evolving. It's a very new concept in Brazil as worldwide, but local institution allocators, they have almost zero exposure to Bitcoin, right? You have to educate what it means. There's a lot of concerns about it. So from that perspective, I think we're back in around 2020 when the strategy first launched in the US market and was the first public company holding Bitcoin. So there's a lot of work there, and we're happily doing so. And a little bit of our mission as a company is to help to drive Bitcoin adoption in Brazil, because the country that needs the most, and Bitcoin comes to solve a lot of the problems we have right there.
Yeah, and just to add to that, obviously I focus mostly on North America, but BitGo is a global company. And so one of the interesting things that I've found is that obviously the bigger retail opportunities in some of these international markets. Some of you've probably heard about Bitcoin has sort of two adoption curves. One is the store of value adoption curve, and then the other is the medium of exchange. The medium of exchange sort of would lag that in North America, is the sentiment. It's interesting that in the international regions, it seems to be they're going together. They don't only want to buy Bitcoin to save in their purchasing power, but they also need to use it to go in and out of whether it be stable coins or their local currency to pay bills or whatever it is. And so I actually think the medium of exchange adoption curve is going to start and really take off in these international regions, probably more than even in North America. I mean, that's just a guess in my opinion, but the trend seems to be pointing that way, which is really exciting for Latin America and APAC, who I think are leading the pack in both of those compared to other regions. So, yeah.
Amazing. So we only have a few minutes left. Last question. What is one thing the audience should be paying attention to that most people aren't in this space?
I'll take second on that one.
I'm just going to harken back to what I said earlier, which is I think paying close attention to what's going on in the global macroeconomic situation with the global settlement layers. all it's going to take is for one or two of, maybe just, I'll leave it at one of these G7 nations to just decide, you know what, no more petrodollar, no more whatever. Bitcoin is now the settlement layer. I think Guy or Dylan had mentioned that the Strait of Hormuz has already announced that. But I think they're not just accepting Bitcoin, they're accepting other things. But once a G7 nation fully embraces Bitcoin as the only settlement layer, because it's the only decentralized monetary exchange that anyone can trust with no central party, to me, that is the most exciting thing for us to pay attention to, because everything downstream from there will be impacted positively. Like literally, talk about omega candles, that's where that comes from, when and if that happens. So that's what I would be paying attention to.
Agree on that front. I guess, not to be I don't think there's much value in being like a Fed watcher or trying to read the tea leaves, but I think the new Fed chair is an important step in the administration's stated goals, and I think the fiscal policy and monetary policy in tandem over the next 18 months will be very, very positive for debasement like trades like Bitcoin and gold.
Guy?
I agree with both points. I'll bring something else. I think the strength of the community, it still surprises me. Being in this space for about 10, 11 years at this point, and like the size of this conference, the many conferences around the globe, the amount of great talent building around Bitcoin, new solutions. We've seen so many innovation around this space, and there's a lot of bears out there, and they're betting that this group of people, these neo minds, the drive of these folks will not eventually win. And I'm pretty bullish that the power of the community will continue to take Bitcoin to different places and eventually will become a world reserve asset as it should.
Amazing. That's all the time that we have. Can you please give a round of applause to the panel?
Thank you. Thanks, Mason.